Good morning, traders and investors. I'm back. I'm back from Washington, D.C. I'm sorry I missed you guys last couple of days, but I have been doing my videos every single morning. Now, let's get into it. There's a lot to talk about. It's 7:52. The market's going to open up in about an hour and a half, an hour and 38 minutes or so. And as you can see here, Nasdaq is up 136 points. The Dow's even up 91 points. This is a big day. Now, before I get into it, and I can get into it pretty quickly, make sure to like this channel, YouTube Wealth Press channel, subscribe to our Telegram channel, and don't forget to visit my VIP room today live. It's free, no cost, link above or below this video. It starts at 11 a.m. Eastern Time. Now, let's get into all of this. I got a lot to talk about. So, as I just mentioned, the Nasdaq is up about 140 points. We had very positive earnings so far from tech stocks. The bond market. Now, I mentioned the bond market for yesterday, and I said that it doesn't look like it's going to break this high. It actually looks like it's going to break this low as it started coming down, and it looks like it has. Now, yesterday, we had some algo selling in the bond market, and they look like they took it down to the low. RSI is really oversold right now. I'm expecting another leg up in the bond market in the next couple of sessions. If you want to know where the algos have been this week, they've been hitting the Russell 2000 a lot, trying to trick traders into thinking we're going to break above this level here, which we haven't broken above in a very, very long time, and I don't think we will. I don't think we have the catalyst. We don't have small cap earnings yet, but it looks like this move from 170 to 195 in the Russell 2000 is a bit too much, and algos have been doing a fantastic job of trying to trick traders and investors into thinking we're going to break above this level. I don't think we're there yet. Maybe later in the year, but not quite yet. Basic materials. Algo traders have been really doing a job on basic materials most of this week. Same type of scenario. Trying to make it look like we're going to break all-time highs or swing highs right here. Don't think it's going to happen. Not all-time highs, swing highs right here. Don't think it's going to happen just yet. I think the market is setting itself up for a little bit of a down day or consolidation. Don't think that's going to happen. Another sector that algos have been hitting hard is the semiconductors. They've been doing everything humanly possible to trick investors into going long chip stocks. But again, look at where we're at right now. I don't think we're going to break out. Now look, chips right now are at a swing high. That would interpret this as a bull market, and we are not in a bull market. So I'm expecting a lot of this to come down to the 120 level in the next couple of weeks or maybe a couple of months. But SMH, semiconductors, small caps, basic materials, they've been being hit by algos pretty hard. Now, we had durable goods report yesterday. We had GDP, we had international trades in goods and services, and we had jobless claims. The numbers were actually better than expected for the most part. They weren't bad at all. And today you've got personal income and consumer sentiment. I don't think consumer sentiment is going to have as much of an impact now after consumer confidence, after GDP, after the squirrely, don't even get me started there, and after all of the reports yesterday. So I don't think it'll have as much of an impact. I don't think it'll be a major report, whereas they should have put it on Monday where it would have had some impact. Personal income is the big number that's coming out in about 35 minutes. I'm not expecting anything too crazy. The big report right now is looser interest rate policy in Japan. Now, do you guys remember over the last few months, I've been talking about Japan and saying how one of the reasons why Warren Buffett is buying right now because they're going to be adjusting their interest rate policy. Well, I think they're doing that right now, and it's really interesting what they're doing, and we'll talk about a little bit about here. But let's talk a little bit about all of the global events, and then I'll give you some technicals. And you've already seen where the algos are: basic materials, Russell 2000. Semiconductors, and the bond market. Russells are hitting a lot of sectors right now because there's a lot of volatility and we're in earnings season. So Intel Corporation climbed over 7% in pre-market. It's going to give semiconductors a nice little boost. One of the reasons why chip stocks are up so much today. Wall Street major indexes, this is yesterday. This is why they did this. They closed lower as bond yields surged following a report that the Nikkei news agency stating that the Bank of Japan would discuss adjustment to its yield curve control at a meeting. Remember I said they have a new prime minister and he's going to be making adjustments? So that's something to keep an eye on. Commerce Department reported U.S. economy grew at 2.4%, a lot stronger at 1.8. Pending home sales were better than expected. Jobless claims were not even at 250,000. So there was nothing exciting to talk about in terms of reports. You've got Exxon. You've got Procter & Gamble. You've got Colgate-Palmolive. You have Charter, I think, today. A lot of companies. Now, the negative is that the analysts are expecting earnings to fall 6.8%. They were in the 5 point something pre-earnings. And I'll talk about that in my VIP room today. And remember, T-Buzz is going to show up in my VIP room today. I'll do my analysis. I'll give you my top stocks. And then T-Buzz is going to come in and we're going to talk about the weekend side hustle. I love the weekend. What a name, right? We're going to be looking at personal consumption expenditures. That comes out in about 30 minutes or so. Consumer sentiment. Again, I don't think the number's going to be as impactful because we've had so much data this week. And personal spending. Now, Europe is down this morning as investors digested a mixed batch of corporate results, while bond yields climbed following the Bank of Japan's move to loosen its signature yield curve control. They're going to loosen their... Remember what I've been saying? Do you remember all this Warren Buffett discussion? For the last quarter, I've been talking about it nonstop while Warren Buffett is investing in Japan because he knows that interest rates are going to go higher over there over time. China closed sharply higher amidst report that regulators have indicated further support for the technology sector. That's really good for us here. With speculation about possible reduction in stamp duties, what the? To stimulate trading levels, it also boosted sentiment. According to sources familiar with the matter, Chinese regulators have requested the largest technology companies in the country to submit case studies of their successful startup investments in consumer telecom and media sectors. That's really good. Japan, let's talk a little bit about Japan, which we usually don't talk much about, aside from Warren Buffett and the new prime minister, who's American educated. Closed lower amid as investors grappled with interpreting the Bank of Japan's decision on Friday to adopt a more flexible approach to its yield control policy. Bank of Japan kept ultra-low interest rates unchanged, but it stated that its target for 10-year government bond yield of 50 basis points on either side of zero would now be regarded as a reference rather than a limit. I'm telling you, interest rates are going. Japan is going to change they're going to go from a country that relies on exports to a country that relies on their own wealth. That's something they're going to be doing. As I mentioned, we've got Exxon, Procter & Gamble, Charter Communication. What are we not reporting earnings on? I mean, talk about everything. This is getting a little tricky. We had good news in some tech stocks, which are pushing communication services higher. This was not here yesterday, but it's good to have this. So right now, energy, material, Dow, the Dow, look at where the Dow is. It's climbing. S&P's climbing. Nasdaq is climbing. But look at what's at the bottom. Real estate isn't doing well this week. Financial's not doing well this week. Consumer discretionary is not doing well this week. Mid caps and Russell, small caps. Looks kind of mixed, but it definitely looks like technology's gaining. Let's look at it over our 3-week period. Energy, Russell 2, small caps and energy, basic materials, financial, mid caps, the Dow. Communication services is in the middle, and you could see here, very, very mixed market. Now, over 6 weeks, you could see something a little different. You could see actually communication services still up here, but for the most part, technology's down here, QQQ's down here, consumer discretionary's down here. So be really, really careful. Market right now is extremely broad. The sector rotations are happening like there's no tomorrow. You still have money coming into energy the most, and a lot of money coming into financial, basic materials, the Russell 2000 over the 3 weeks. A lot of money coming into this, mid caps, a lot of money. I'm finding a lot of good small caps, but it doesn't look like technology is on the front end. It looks like it's on the back end of the climb right now. So be really cautious because you don't have a lot of large cap technology companies reporting, and you have a lot of other companies like the broad market, small caps, mid caps reporting. So there's a lot of things on the horizon right now. In terms of charts, let's look at these charts. So energy looks like it's having a nice little rally, but it may be getting a little stuck here. The Russell 2000 had a nasty bar down yesterday. Keep an eye on it. Might be topping out. It's, as I mentioned earlier, it's near that resistance level right here. Major resistance level right here, although I like how it's moving. I still like basic materials, but again, these 3 bars are causing me to pause. 3 higher volatility bars is no good. Financials look like they're starting to break down a little bit. Industrials still look really strong. The Dow looks strong, but again, I don't like this bar yesterday. This bar yesterday really bothers me. Bothers me. But let's see. The fact that the market is stronger today is very optimistic. Keep your eye on the broad market. Don't favor any specific sectors. The only thing that where I would put more money in right now would probably be energies and mid-caps. I like how energy, mid-caps, and the Dow is moving. But it's a very, very finicky time for the market. Now, I always promise you in the end, I'll give you a couple of day trading stocks if you're a day trader. So today, let me give them to you right now. It's SIGA Technology. The stock is only up 30% right now, and it looks like it's ready to start coming up. It had some news. It has some catalyst. It closed at 5. It's up at 6 something. This stock may be a runner or a reversal today. It's the biggest volume player right now, and INVO. The stock is up 22%. It's up at $4. This stock is up it's up 2,237%. Look at this thing. I mean, it's crazy. It's insane. I don't even understand this, but it's up a lot. It closed at the bottom, and it's higher right now. It's a big player. It's not up 2,200. This is a mistake. It's up like 200% or 100%. But the stock is doing really, really good pre-open. And sometimes when you see moves like that, they can cause a big volatility spike. Look at this. It went from $9 to $16. I mean, this stock can move. So again, these are day trading plays. I'm going to be talking a lot more about day trading. I know a lot of folks are not into it. A lot of folks are into it. I'm going to separate it from swing trading, but at least you have two stocks that you could day trade with today, INVO and SIGA. I really like SIGA. I like this stock. I think it can move. Now, folks, remember what I said. The Russell 2000 is at a very critical juncture. A lot of stocks look like they could be coming down. A lot of sectors look like they could be coming down. Sectors are mixed right now. There's no clear directional bias. Folks, welcome to the middle of earnings season. We got to be really careful. Matt and I were trying to put some trades on yesterday. Let's see. 4 out of every 5 stocks we picked, or 9 out of every 10 stocks we picked, no earnings. So be patient and be careful. We're trying to protect you from yourself mostly, but I want to make sure you understand we're not putting a lot of trades right now because earnings are like literally after this week is over, it's going to be a lot easier, and after next week is over, we're back to normal events. Now, folks, I want you to hear me out good. In just a few hours at 11 a.m., I'm going live with a good friend, Tom Busby, T-Buzz I call him, to go over the details of his weekend side hustle project. Even better, T-Buzz will reveal what stocks he's trading this weekend and exactly how he's playing it. And I can't wait to see this, and I want you to see it for yourself. So you'll get his next stock and all the goods on how you can start targeting extra income each and every week, all while the market is closed. That way you can spend time doing what you love. It's happening today at 11 a.m. Eastern Time. I've combined it with my VIP room today. I'm going to give you guys the best stuff for 10-15 minutes, and then we're going to hit the weekend side hustle. You don't want to miss it. T-Buzz will be all over it. Follow the link below to subscribe to my Telegram channel. Join the VIP room. The link is above and below, depending on where you go. And join our YouTube Wealth Press channel. We get higher ratings. It helps us. And like our videos. Comment below in the video, and I'll talk to you guys soon. I want to know if you guys like this format. Bye. Have a great weekend. Clyde and I are going to rest, and we'll see you on Monday.